We are still in the Forex market, and we have Gonzalo Cañete, Chief Strategist at ATFX Connect on the other side. Gonzalo Cañete, Chief Strategist at ATFX Connect. How are you, Gonzalo?
Good evening. How are you?
Well, we want to talk to you about many things because we are in the middle of a mess of Powell's appearances. We already know that Powell has to appear before the cameras every 6 months. Every 6 months in front of the cameras, and well, he is basically telling them what the Fed wants to do, and that the issue of maintaining the rates for the time being, although there are details that say that, well, the Fed wants to maintain the rates for the moment. Although there are details that say that, well, they do see that the issue of rate hikes has reached its peak. The subject of the rate hike has reached its peak. If you want to start with this, since it is a bit recent, and it is also a little bit of where the markets are going to look.
Yes, of course. Well, let's see. I think the fundamental debate now is who moves first. That is to say, if the Federal Reserve will continue to postpone this rate cut, then it remains to be seen whether it is the European Central Bank that has more chances to cut rates first because it is the one that needs it most, something that we have repeated time and time again. And that in addition, there is increasing speculation in surveys that are being published on Treasury traders that many believe the same thing, that the rate cut could come sooner from the ECB than from the Federal Reserve. Technically speaking, that is to say, what really demands it. Others is to allow the ECB to cut rates before the Fed because the Fed is supposed to take the lead on monetary policy ahead of the ECB, I think. Yes.
Because we have already seen what would happen with the dollar, and now the issue of the euro is basically very closely linked to the performance of the dollar. And we also wanted to comment on the pound because, well, apart from the issue of whether it is maintained or not, the issue of the rate cuts or not from June onwards and so on. The pound is still strong. We are seeing it strong, but it is still below that sweet zone. And so we wanted to review a little bit the pound topic, how it is still so strong, and these levels to update also a little bit for the listeners, all the chart that we have on a daily basis. That well below around 27.51.28 is still a good area for selling.
That is, I think that in reality, what we have in the pound are good selling opportunities because it remains strong. We should not forget that the pound is probably the only currency by fundamentals that can stand up to the dollar because obviously the euro cannot. The euro is the world's second reserve currency after the dollar, but the pound, which is the old dollar of the economy before the end of World War I, the economy was pivoted based on the pound sterling and the dominance of the British Empire globally. But in this case, what we are seeing is that the United Kingdom is still an economy that has, for a start, a very low unemployment rate, 3.7, 3.8, similar to the United States. It has a growth rate that, yes, is sluggish, but also inflation seems to have stopped scaring them. It has fallen. It reached 11% in October of 2022. It has fallen to 4%. Now it's flat. The last two inflation periods we have had, November, December, January, are at 4%. So it doesn't seem to react from 3.8 to 4%. It seems to be stagnating, which should worry them and not invite them to cut rates. And knowing this in advance, obviously, then the pound resists. Why? Because if there is speculation of rate cuts by almost all the central banks of the G7 countries, then we have in this case a pound that we know cannot cut rates as long as the inflation rate is not falling and it has been almost unmoved for 3 periods. Therefore, we can bet that the pound can be maintained as cement, and the only thing that would move down the pound-dollar pair would be the pound. Is what we said a moment ago, that the dollar will be the one that hits the starting gun, that the dollar in one way or another, either because of the risks of new inflation, rising oil prices, and because the economy is holding up, because it is growing faster than the European and British economies, can even afford to raise rates and therefore leave all currencies behind.
And to finish and crown with this, about OPEC, you have commented before on oil that if they are going to make the decision to reduce production, that decision is already, the issue that they are going to cut production is already taken. So they are pushing oil prices up a little bit, and this is not being seen either. In which way we are not seeing a strong reaction in oil prices either. But yes, the targets are going to the, I will tell you that at $86 could be in the medium term.
That is the target that I have as a possible next resistance. And when I say the decision is because they have decided to cut production, but they have been deciding since last year, since August, when the production cut was agreed between Russia and Saudi Arabia. And nevertheless, we have seen that from the initial drafts that speculated with a cut of 2 million, which remained at 900,000 barrels per day, they have remained very weak. Therefore, we have to see if they are able to carry out some kind of agreement that really means a reduction in the supply of crude oil at world level, because last year, very little of those intentions remained. Angola was removed from the cartel, and the decisions that were made to reduce it in the end were very soft, very basic. I believe in part that in order not to create conflict, mainly with the United States, which is probably the one that has asked not to reduce the supply of crude oil, that the global supply of crude oil should not be reduced. And since all this is strategic, as long as Russia can continue to place crude oil, the United States does not want it to go up either. Saudi Arabia has always been a hinge between the United States and the Middle East. So it is basically as an extension of Middle Eastern, US, and Middle Eastern interests. So it works very well along those lines. I think there are a lot of interests mixed in there that the US is probably making agreements on so that this doesn't happen. Let's not forget also that the United States has to recapitalize its crude oil reserves that have been spent during the pandemic, and therefore they are not stupid. They don't want to recapitalize them with a rising crude oil. They don't want to do it with a rising crude oil. They want to do it with a crude oil that stays cheap.
Phenomenal. So we stay with those zones. We stay in any support. Is a good opportunity to buy that oil, and we will work more pairs conditioned to oil, maybe in other spaces later on, okay?
Perfect. Thank you
Gonzalo,
very much.
we will be very attentive to what Faith says and to the non-farm payrolls. So next week we have here to comment everything again, okay?
Thanks for counting on
A
me.
hug.
Best
See you
regards.
later.
See you later.